Available now on Blu-ray Combo Pack and DVD.
On the line in Toronto is Lisa. Good evening.
Hi, good evening. Thank you for taking my call. Mr. Burrows, you're my all-time favorite analyst. I've been advised to purchase McDonald's and or Visa or both. I heard you speak about Visa. I see you have a very positive outlook for it. I just been thinking maybe to hold off since maybe we're entering a turbulent period. Mm-hmm. And would you consider purchasing both or either? And what would be the stop loss? Okay. I'll hang up and listen. Thank you very much.
So as I said before, we're really not prepared to make a big bet on a stronger economy, but we are willing to be invested based on the fact that, you know, these Fed actions do force people to put money to work in asset classes. So we like things that are more predictable, and McDonald's certainly fits into that camp. McDonald's has a tremendous balance sheet. They're generating lots of cash. They've got very predictable earnings growth and dividend growth. So certainly in the last 4 or 5 months, stock pulled back. I think it gives a pretty good entry point. I think the long-term theme is in place, and I think that you're not going to get hurt too badly. I think the big thing that we have to consider is how much risk do you take on in the event that this round of easing doesn't last quite as long as the last one, which didn't last quite as long as the first one. And, you know, we've had a lot of catalysts come into the market over the last few weeks, and now it's going to come back to looking at the economy and what the earnings do. And, you know, this quarter is going to be a tough earnings quarter. So I think McDonald's you don't take on a ton of risk here. I think that there's always market risk in the fall. I think you might want to pick your spots and maybe make a couple of different purchases along the way. But we think that McDonald's is in the key theme, which is very large cap, predictable cash flow, and dividend growth.
And do you hold this?
We don't own the McDonald's right now. I certainly could own it because a lot of the consumer names have pulled back and given good entry points.
Shifting to oil and gas, we have Tony on the line in Montreal. Good evening, sir.
Hello, gentlemen. Thank you for taking my call.
You're welcome.
I'm managing my RIF portfolio, and I'm underweight in the energy sector. I've been holding back buying a gassy stock for a few months now, and I'm wondering if it's time. I'm debating whether it should be Bonavista or Arc Resources.
Okay. So, Tony, certainly this is a question that gets asked all the time. You know, is it time to buy gas? Is it time to buy gas? And structurally in North America, we've had very, very low gas prices and lots of volume growth. So the way that we've tried to take advantage of gas and the growth in gas production is more on the infrastructure side of things and just basically benefit from processing and transporting it. One of our picks tonight will be in that group. If you wanted to own gas specifically, I would be more likely to look at something like Peyto because Peyto is a very low-cost producer and they have lots of liquids which are quite valuable for sale into the oil sands and so on. So I would stay away from the Bonavista. It's a bit of a bottom fishing pick, and that's really not our style. I think that Peyto has more longevity in the event that you wound up in a tough market environment. The leaders are the ones that survive. So I'd buy a Peyto over a Bonavista.
But you don't hold Peyto?
We do own Peyto.
Oh, you do? Okay, I'm sorry. Yeah. And here comes a chart, PEY. We've heard a number of our guests talk about Peyto. There's a look at Peyto Exploration, PEY. David Burrows says he holds it for clients. Here's Andrew, who's in Toronto. Good evening.
Good evening. Good evening, gentlemen. David, I'd like your thoughts and evaluation regarding Thomson Reuters, please.
Sure.
Thank you.
So, Andrew, Thomson Reuters has been going through, it seems like a shareholder turnover for a long time as they've been recalibrating the business. I think from a really high level, and I haven't taken a really close look at it in a long time, but the fact is, you know, financial services industry isn't getting bigger right now. There's certainly been lots of cost cutting, and I think that, you know, revenues across a bunch of service providers have been somewhat challenged. So this would be more of a value investment. I don't think that there's a key theme in place that really we can take advantage of in the short run. There's probably better places to look.
Not a lot of momentum on that chart, unfortunately, for Thomson Reuters. We are going to take a quick break, and we'll come right back. We'll have a look at the past picks of David Burrows.